Now, we'll try to go. The internet cut out again, and so that was sort of interesting how the internet's going in and out. But sorry about that. Adam, why don't you set up my laptop or set up an alternate connection in case this goes out again? But anyway, we're sitting here on Thursday. I think this is a key time in the market period, and I'm going to give you some ideas, and hopefully from. All right, the title of today's presentation is Myths in Trading, okay? And I think that there are a lot of sayings and things out there that may or may not be true. And what I want to do is try to, if possible, go through those. And I know that when I'm trading, I'm always trying to think, is this a good odds play? Or is it? Fire me, Peter?
Hey guys, I tell you what, we're going to try to iBridge Tom in. His audio's having some issues, so Tom, we'll iBridge you in.
Well, who's going to change the slides?
Is this better?
We can hear you. You can take it away.
All right, well, thank you. All right, holiday markets can be hard to trade. Well, first of all, I find holiday markets, this is a myth. I think that is a myth. I think the holiday markets are one of the best markets to trade. Let me give you an example. Does anybody trade the day after Thanksgiving? That was one of the best markets of the year to trade. And you might write this date down. The 26th to the end of the year, historically, that's the best week of the year to trade. Historically, and that's coming up in the next few weeks. So, I think that when you're sitting here and you're thinking about the holidays, you got to have some strategies. And here's a couple of them that I want to talk about. And there's a lot of different strategies, but let's try to keep the strategies. How many people here know about selling options? You know, options can be a very lucrative strategy if you know how to manage the risk side of options. And one of the things that I believe that I like to do is weekly options, and I like to do weekly options on the E-mini futures. In fact, yesterday, during the rally in the market, I sold some 1445 call options. I sold for 440, which is about on the future side is over slightly over $200. And if you look at the market today, one day, and now remember these things do not expire this week, but next week, in one day those options have dropped to 2. And so this is a good way around holidays, especially, to accumulate some money. And again, the 1445s, we only got as high yesterday on the S&P, I believe, to 1438. So with the S&P coming down, it made that option deteriorate pretty fast. And so I think selling options is a good way. I think that as we go into the next 6 days, though, you need to be thinking the other side of the options, and I'll talk more about that later. Okay, but selling options are good, and they're good if you use that time curve. One of my general rules in selling options, I like to sell options with less than 30 days. I would like to be out of the money, and I would like to make sure that if I'm out of the money, I'm able to take advantage. I want you to look at that slope of that curve. And I don't know if you remember this or not, but I was around. Back in the day, they had a service called Value Line. I don't know if they still have it or not. They did an article on options, and it got my attention when I saw this time curve. What do you notice about the slope inside of 30 days? Do you see the degree of drop-off in the last 30 days? It's very steep. And by that steep curve, it's really, really hard for somebody on the other side to make money. It really has to move, and it has to move a lot in a short period of time. So there's two elements you look for. Inside of 30 days, that's one. And the second one is far away as possible at the strike price that gives you a reasonable return on the equity you have to put up to do the option. And I define a reasonable return as approximately a 20% return. And it's a strategy that's worked well for a lot of years. How many years is it from 1980 to now? That'd be 20, 30, about 32 years. There you go. There's a time-tested strategy. Been doing it for years. It's a great strategy. All right, weekly options. Now, weekly options is a new, I guess, vehicle. And at first, I was very reluctant to change from what I call the monthly options to the weekly options. And then a friend of mine started showing me some tactics, and I started using those tactics on the weekly options, and I love the weekly options. Does anybody here ever do the weekly options? And then I'm going to ask the question, have you done in from the long side or the short side? Okay. Well, let me give you an idea. Are you familiar with a stock called Google? This week on Monday, I did a 2-week option on Google on, I think it was Monday or Tuesday, I forget. But anyway, I paid about $6 for it, and within that same day, it had doubled. And I know that when I had done that, I thought, wow, that's pretty good. And so the weekly options offer a lot of potential, especially if you get a stock or a future that's really going to move in a short period of time. And I'm going to talk about that in a little bit when I get to the end. John, what I do on the strike price, I try to get as close to the strike price as possible. And are you familiar with delta? I like to have a delta of 0.25 on anything that I do on the long side there. And the reason I do is because it gives me a good way to base my return and base what I need to do on a 10-trade concept. Now, another way to take advantage of holiday market is the pre-market. And has anybody here ever traded the pre-market? A lot of people trade the futures market before the, say the day market opens. But do a lot of you trade the actual pre-market? My favorite time to trade is in the morning from 5 a.m. to 7 a.m. And I did most of my trading today from 5 a.m. to 7 a.m. And that's Central Time. And we've developed some tools, and we've developed a couple ways to analyze whether the market's overvalued or undervalued based on what Asia did and based on what Europe is doing. And this morning, if you were looking at the market, Asia was a little mixed. Europe was a little strong, but not real strong. And I actually traded the DAX this morning. I don't know if you traded that market, but that's a good ride, too, early in the morning. But trading in the pre-market. Another way you can trade the pre-market, this is a simple way, you can check over on the FTSE, find out what's moving, and then you can find out, by doing that, whether or not you can buy in the early trade in the stocks that are moving over there, and then you wait for the markup, and then you can take advantage of taking it, okay? John, futures options are traded in the after markets. John, not if you know a couple things about Apple, and we have some software that sort of defines support, pivot, resistance, and you can do it. The easiest way to check the FTSE, do you have Bloomberg TV? If you look at Bloomberg TV, they'll give you the top 10 there, and I look at the plot, the top 10, and that's where I take it. But here's something you probably won't hear from anybody else. I developed this concept. It's called the global handshake, and when you go from Asia to Europe, there's a handoff. And because of that handoff, you're able to mark up or mark down what it is. Markets. And we got a calculator that does it. It's pretty simple math, but knowing how much that blended market has moved can give you a prediction on where the S&P is going to be. And this is an example of what it looks like. You see the Hang Seng and Nikkei, that's Asia. And then you see the CAC, the DAX, the FTSE, and Swiss. You get an average, and then you get a markup to the previous close. In this case, it wasn't much, and that's where it opened. But sometimes it moves 8 to 9 points. And the time it's valid is around 7 a.m. That's how it works. And so what you do is you take those 6 markets, take the calculation, and then apply it with a blended markup to the S&P, and it sort of gives you a baseline to what to look for about 7 o'clock in the morning. That's one of the first things I check when I get up in the morning at 5 a.m. to find out whether we're going to be heading higher or lower fundamentally. And it's sort of it's a good way to do it. Yes, James, that is 7 o'clock. So it's a pretty neat thing that we developed that gives us an edge as we go into the pre-market. Now, it's real simple. You take those 6 indexes. Now, we have software that does this, but you can do it mathematically. You take the 6 indexes, you take the average gain, and at the average gain, you add it to 100 and multiply that times the S&P, and it'll give you a predicted price of the S&P for 7 o'clock. And it tells you where the ES should be trading based on that global handshake. Has anybody ever heard about this before? Has anybody ever used it? You ought to do it, and then do it tomorrow. Tomorrow will be pretty important to do it, and you can see how close that will be to sort of let you take a glimpse of what the future should look like. Pretty neat little way that we created there here at DTI. All right, and I guess the real question, how can it help you increase your accuracy and reduce your risk? Let me give you an example. Say you wake up in the morning and you got a handshake number that predicts an S&P, like today it's currently about 1418 basis December. Let's say it predicts a price value, weighted value of 1421, and you happen to be short. Well, you know that you might want to take your profit sooner rather than later. And that's how you'd use it in that case, by increasing your accuracy. And, of course, reducing your risk because you would know to expect to see 1421 by 7. And it's pretty accurate. About 8 out of 10 days, you can get that exact number almost by 7 o'clock by following that overnight global handshake. Has anybody here ever taught you that or talked to you about the concept as you go from Asia to Europe, and Europe to U.S.? See, most traders, like I said, I've been around a while, but most traders never get there because no one explains it to them. I wish somebody would have explained it to me many years ago. It would have saved me a fortune. So the global handshake, write that down and find out some more information about it. Like I said, the optimum time to use it is 7 a.m. 7 a.m. in the morning. That's Central Time. Tomorrow, for example, I'll be teaching a DAX class about 6, and then I'll transition into that 7 o'clock time. But right here, now these times, you ought to write these times down. This sort of divides the world into 4 different time segments. 3:30, p.m. this afternoon to 3:30 a.m. is the Asia time period. And about 3:30, Europe takes over. But I want to point out something. We were talking about it today in the class, okay? Notice during the U.S., has anybody ever made money in the morning and lost money in the afternoon? The reason you did is because there's a time shift at midday at 12:30. And we noticed that through our testing and through our trading. And our students love the fact that we've identified that key time there at 12:30 in the afternoon to 3:30, the U.S. afternoon. Bert, just made the conversion. 12:30 Central Time is what time Eastern Time? It'd be 1:30, right? So just make the conversion. You can convert it. I don't, but you can. How many people find it interesting to go where Wall Street doesn't take you? In other words, trying to be different and having the edge over everybody else and all the other players out there. Y'all find it interesting to give yourself that edge? And then I think when you do find it interesting, you ask yourself, okay, now maybe I understand why only 5% of people make money. Having the edge. If you go Wall Street's way, you're going to be like 95% of all the people lose. Okay. Now here's a trade. This is the third way I wanted you to take away the holiday. We call it equilibrium trade. Let me tell you how this works. The market closed this afternoon, and around 5 o'clock, we will kick off at 5 o'clock a directional move towards the 1230 number. And the 1230 number is where we have the time break from eastern side of the U.S. to western side. All right? So if I go look at today's market, let me do that real quick. Now is trading 1418. The 1230 number today is 1420. 1420. So if you're watching Asia tonight, what you're going to see is a move from the current price up to that 1420 number. And that's going to happen sometime during Asia. We call it equilibrium trade. So if it closes 5 or 10 points, that's a range between 5 or 6, it has a 90% chance of trading back to that 1230 number. So you record the 830 to 415 number, you take the day low, you take the 1230 print, which I gave you on the thing, you take the closing price, you look at the reference bar, and then you see the break as Asia opens tonight. You see that trade happen that I just talked about as it goes up to, and then tonight's market should go up to that 2050 area. Everybody got the concept. It goes back to the balance point. Peter, that's been tracked over a long time period, and that's how the approximate 90% came from. This is a very good trade. A lot of our students trade this trade when it sets up, and it kicks out and tells us to do it. And I'm just trying to tell you what to look for if you're looking at the market tonight, and it sort of wakes you up to know what the other 5% is doing, knowing this kind of stuff about the market. So, I started out talking about, holiday markets. I tried to talk a little bit about, a couple techniques, options being one, the pre-market being the other, and I finished up with how do you go from what I would call where we're currently trading to a target in Asia, and that's basically you walk it with that equilibrium trade. It makes it pretty good. This goes through the different, different setups, how to place the stop, how to do all that stuff, but that's the mechanical portion of it. But if you leave here with anything, I want you to leave with the following thought. The market will always, always try to trade back to, sometimes it doesn't make it, to that 1230 number. Now, if you're above it, it trades down. If you're below it, it trades up. And we have these type of trades all through our manual. And a lot of people just focuses on this time. Like if you had a full-time job and you said, hey, I want to trade the S&P, then you would trade this trade probably 3 times a week when it sets up through the course of a trade week. With the 24-hour global market, you're not limited just because you got a job. Now, I talked about the last week of the year, and I talked about this year is very important because if you think about it, this is a very strong week that goes into January. But what happens this year if that week is not up, if it's not an up week? That is your first warning sign that next year might be a bear market. So I'll be looking for that the last week of the year to set me up as I go into January. And so that trend from the last part of the month is very important. I got about 2.5 minutes. I'm going to try to get to my slides. I got a lot more to talk about, but I guess under the rules, they give you a certain amount of time. We lost a lot of that due to the technology. But here's a trade that we're trading. We're doing this through the Russell. IWM, the small caps, outperform the large caps. And there's a buy signal on the small caps. Okay, I think what we're going to do, I think since I'm going to travel to another location, and Linda, you almost read my mind. I have what I am calling maybe the trade of the year, and I'm going to discuss that at 5 o'clock, and I'm going to do it today. I'm going to get home and set up my computer at home where I can show you some of my software, show us where we're trading. I'll do that at 5. Maybe we can get somebody to post a link in here, and then if you get a chance, come join me there at 5, and I can get into more details about some of these ideas, and actually how I'm going to trade tonight in the using the fiscal cliff. Because if you remember at the first of the presentation, I said this is the biggest economic event left, and you better understand it. And so I've done an analysis, and I want to show you some numbers. It might help you when you go into tomorrow's trade. So post a link. I want to thank Morgan for inviting me to be on here. Again, I think I've got some things I can show you that might help you. You know, when you've been around as long as I have, you learn a lot. And we'll be in a little bit better environment. I won't be rushed. I can go in some detail, you know, with our software and what we're doing. I want to thank everybody.
Great. Thank you, Tom. We appreciate you taking the time to be here today. And again, we did record